Well, after a month of trade fears taking something of a backseat, this week has brought those worries back to the top of mind for investors. So how should you be playing the current environment? John Mair is the Chief Investment Officer at Global X, and he joins us now. John, thanks for being here.
Thanks for having me.
So, this week trade was really the big mover. A lot of noise around that. And I guess just the question to you would be, how do you view that current situation right now? How much has changed, I guess, in the last 6 weeks?
Sure. First of all, the markets like certainty. And I think the markets felt like they had some certainty. But there's been news that Trump and Xi are not going to meet on March 1st. So that's a bit of concern, and it's kind of spooked the markets. But I think the trade issue is a lot bigger than everybody thinks it is.
Bigger?
Bigger.
We're paying so much attention to it.
Bigger in the sense that it's not just a Republican issue. It's a Republican and Democrat issue, and it's a global issue. I think that we'll probably get some sort of deal in the short run, but I think this is going to carry through to the next administration, whether it be in 2 or 6 years. I think it comes down to like China's autonomy. I think everybody wants a little bit of a win, but it's not as simple as we actually. But it's not that the U.S. wants something and China has to give it. It's just not that simple.
So then what sectors do you like if you're looking at China? Because one of the things I keep trying to get my head around with this trade deal is even if we get some sort of deal this spring, China's economy is not going gangbusters. And it doesn't even all have to do with trade. Right. There were a lot of issues before Donald Trump even came to office. We had so many people saying, oh, there's a bubble over there and I'm going short. So what do you even like in this environment?
Well, China is a pretty cool place. It's the second largest economy, but it's an emerging market. But it's a very special emerging market. And it's something that you can't really avoid. You have to have it in your portfolio in some way. Now, we just came out with a whole suite of China sector ETFs. Those sector ETFs mimic the GIC sector, so they're all 11 GIC sectors. And some will do well, some won't do well. This year, they've all done well, but the one that's done the best and will continue to do so, from my perspective, is China healthcare. Now, you have 1 billion people. You have people moving from villages to the city. A lot of cities have been built in China. Now you have this huge population that's aging. Now by 2040, you'll have about 350 million people that are 60. They're going to need health care. And it's a very new healthcare environment. And I think it's going to be tech related because it's starting from ground zero. Everything relates to tech when you start with ground zero.
Trade tensions, you have a slowing economy. Is this the year that the Chinese debt markets just blow up and come crashing onto our shores?
In some ways, I don't think so, because China is insulated to a certain extent, and it's a command economy. So they really can dictate their debt levels and how they're going to pay debt. So it's paying one side and paying the other side. So there's a lot of internal aspects to it. Remember, it's a communist country.
And just thinking about the U.S. here, something we've talked about before on this show is just infrastructure, right? It's an issue that's clearly needed to be addressed in the U.S. economy, but hasn't yet been addressed. And I guess for investors, is it still an attractive area to be looking at? Because it feels like every week is infrastructure week, or we have the State of the Union last week, and infrastructure gets pushed further and further down the line. But it is something, you mentioned trade as a bipartisan issue, so is infrastructure.
I just took a trip and I went to LaGuardia Airport, and they're building this new great airport. And
I'm so sorry.
Good luck.
Had to go to
no, but
LaGuardia.
it's like I went to the new part, and I was like, wow. I mean, it's obviously just a little part of it. And I go to a lot of airports in this country, and we need new airports, and we need new roads and new bridges. Somebody has to solve this issue, and it has to be bipartisan, and it's something that has to be on everybody's agenda. We do have an ETF that focuses on U.S. infrastructure. The ticker is PAVE. I can't say that a $1 trillion infrastructure plan is going to happen. We hope it happens. Hope's not a strategy.
Is it enough?
What's that?
Is it enough?
Probably not.
But eventually there will be appropriations, right? You go from hope to appropriations, and then maybe you get some movement.
And when a bridge falls down, they build it. Is that infrastructure? Sure. I don't think so. That's
it's tragedy.
It'll have to count for now. All right, John Mair, CIO, Global X Funds. Thanks so much for joining us.
Thanks for having me.